Trump's Vietnam tariff shock. A trade deal that changes everything. It happened fast. One morning in early July 2025, the world awoke to a new trade order. In a signature early morning social media post, President Donald Trump announced a sweeping agreement with Vietnam, one that he claimed would rebalance trade and bring fairness back to American exporters. "Great deal with Vietnam," Trump wrote. "We have reached a historic agreement, tariff-free access for U.S. exports, and a 20% import tariff on Vietnamese goods." At first glance, it sounded like a win, a bold move, a diplomatic triumph, a promise fulfilled. But buried within the deal's fine print was a shockwave that sent tremors across global markets, boardrooms, and supply chains. The U.S. would now impose a blanket 20% tariff on all Vietnamese imports. Even more striking, any product that had originated in another country, such as China, and was transshipped through Vietnam to avoid U.S. tariffs, would now face a punishing 40% penalty. This was not just another trade headline. It marked a dramatic escalation, a decisive move that stunned retailers, rattled economists, and threatened to reorder the global trade landscape once again. From trade agreement to trade shock, Vietnam, Trump said, had been tough negotiators, but good people. He praised them while accusing them of charging the U.S. exorbitant duties to 90% in some categories, he claimed. The New Deal would, in theory, flip the table. American exports would now enter Vietnam duty-free, while Vietnamese exports would pay dearly at U.S. ports. But for many Americans, it felt like a rerun from the past, another trade war, another populist tariff policy, another nation caught in the economic crossfire. Only this time, the stakes are higher, the numbers are bigger, and the global supply chain is far more fragile. In 2024 alone, Vietnamese exports to the United States totaled over $140 billion. That includes essential goods like apparel, furniture, electronics, footwear, and industrial components. A sudden 20% surcharge on those items doesn't just hit companies. It hits families, shoppers, and small businesses. Now, the $800 sofa from Da Nang is going to cost $960. The $300 smartphone, assembled in Hanoi, expect to pay closer to $340. Even back-to-school staples, sneakers, backpacks, lunchboxes will carry hidden import taxes embedded in their final price tags. Electronics and the tariff wall for multinational giants like Apple and Samsung. The shock is even greater. Over the last 5 years, these companies moved major portions of their assembly operations out of China and into Vietnam to avoid earlier tariffs from the U.S. in a trade war. But now, those carefully calculated relocations are hitting a new wall. Assembly lines optimized for tariff efficiency are suddenly unviable. Do these companies shift operations again, absorb the new costs, or pass them to consumers? According to a Bloomberg early estimate, prices for electronic goods assembled in Vietnam could rise 8 to 12% by year's end. That's not just an inconvenience, it's a strategic disruption. The impact isn't isolated to tech. Every major retailer from Walmart to Target, from Nike to IKEA, has sourcing roots in Vietnam. These companies now face surprise duties on shipments already en route to U.S. ports. For many, it's too late to adjust prices or redirect cargo. And with back-to-school season approaching, that timing couldn't be worse. Vietnam, a strategic target. Why Vietnam? On the surface, the Trump administration claims it's about fairness and enforcement. According to senior officials, Vietnam had become a key transshipment point, a loophole in the U.S.-China tariff structure. Chinese-made goods were increasingly being routed through Vietnamese ports, relabeled, and then shipped to the U.S. as Vietnamese exports. That practice, the White House says, undermines tariff enforcement and cheats American producers. This deal, they argue, closes that loophole and finally forces Vietnam to open its markets to U.S. exports. Indeed, Vietnam has agreed to remove all tariffs on American agricultural goods, pharmaceuticals, technology, and manufactured items. For American exporters, particularly in food and farming, this could be a massive win. U.S. wheat, beef, dairy, and grain producers now have preferential access to Vietnamese grocery stores, restaurants, and industrial supply chains. In theory, it's a reciprocal exchange, tariffs on Vietnamese goods in exchange for open Vietnamese markets. But in practice, the effects are asymmetric. The average American consumer doesn't sell grain to Hanoi. They buy goods, and those goods just got more expensive. Winners and losers. Let's break it down. Winners, American exporters, agriculture, pharmaceuticals, and some machinery sectors now have a new tariff-free route into Vietnam. U.S. farmers, particularly dairy, wheat, and beef producers looking to replace lost exports to China, now have a growing Southeast Asian market. Trump's trade agenda. Politically, this fulfills a key promise to protect American industries and punish trade circumvention. Losers, American consumers. The price of consumer goods from Vietnam is going up across the board. Retailers, from electronics to apparel, many companies now face unplanned costs, reduced profit margins, or the need to pass price hikes to customers. Vietnamese factories, thousands of them rely on U.S. buyers. A 20% tariff overnight could mean job losses, cutbacks, or even shutdowns. This is not just about trade numbers. It's about pressure. It's about a message. Geopolitics in disguise, make no mistake. This is more than economic policy. This is a geopolitical pivot. Trump's team has made clear that trade policy is a tool, not just for domestic benefit, but for reshaping the global order. By penalizing transshipment through Vietnam, the White House is drawing a line. U.S. markets are not open for backdoor access from China. The 40% penalty on rerouted Chinese components is a clear warning to supply chain managers. There will be no tolerance for gamesmanship. At the same time, this move sends tremors through Asia's trade architecture. Countries like Malaysia, Thailand, and the Philippines, all of whom have seen increased U.S. trade in recent years, are now watching nervously. If Vietnam can be hit this hard, so can they. And they know when Washington targets one node in the supply chain, the impact radiates outward. Panic at the ports at major U.S. entry points like Long Beach, Los Angeles, and Savannah. Customs brokers are already reporting a spike in last-minute shipment cancellations. Some importers are trying to reroute containers through alternate hubs: Malaysia, Indonesia, even India. But there's no guarantee those routes won't be next. This administration is fast and unpredictable, said one broker. They don't warn, they strike. That unpredictability comes at a cost. Economists call it the tariff volatility premium. It's not just the tariff itself. It's the hidden cost of operating in an uncertain regulatory environment. That premium is now rising sharply across the supply chain. For long-term manufacturers, that creates a chilling effect. It becomes harder to commit capital to a new plant or warehouse when policy could shift overnight. And for businesses, planning becomes guesswork. The Vietnamese response. Vietnam's official response has been measured. A government statement described the deal as mutually beneficial and emphasized commitment to cooperative enforcement and fair trade. But inside the country, concern is mounting. Thousands of factories in Vietnam are deeply integrated into American supply chains. A 20% import tax instantly reduces their competitiveness. Many firms are already eyeing Europe and regional markets for new buyers. Others are considering layoffs. There is also growing anxiety over what this means for Vietnam's long-term trade future. Will the country become collateral in a U.S.-China rivalry it never asked to join? And more broadly, how do smaller economies protect themselves when the rules of global trade seem to shift at the whim of a tweet? America's farmers. A mixed picture. Some American farmers are optimistic. Vietnam's market offers new opportunities, especially as